Hey everyone, welcome to today's XRP market analysis for April 25th. You know what I've noticed? The market's giving us some really interesting signals today, so let's dive right in and see what's happening with our beloved XRP, shall we? Oh, before we start, this video is based on an AI-generated report, so please use it as reference only, and remember, investing is always your own responsibility. I'm just here sharing what the data is telling us. All right, let's start with where we are right now. XRP is sitting at $1.43, and it's down about 0.37% in the past 24 hours. Now this is interesting. We're seeing some really strong behind-the-scenes action. There's been $22.6 million in net inflows into XRP ETFs, and get this, 34.9 million XRP just moved out of exchanges. Here's the thing. When coins leave exchanges, it usually means people are planning to hold them long-term. Smart money is definitely accumulating. Now let's look at the technical picture. And this is where it gets really fascinating. The RSI is at 57.7, which is right in that sweet neutral zone with plenty of room to go up. The MACD just crossed above its signal line. That's a bullish sign for us. XRP is trading between the middle and upper Bollinger Bands, which tells me we're in a bullish pressure zone. The short-term moving averages are looking good, though we're still about 22% below that 200-day average. Don't worry though, that just means we're recovering from a big correction. Here's what's happening in the bigger picture. Bitcoin just hit $78.095 with 13.6% gains this month. The correlation data is telling us something interesting. XRP tends to do well when the dollar weakens, and right now we're seeing some of that dollar weakness. There's also some geopolitical stuff happening, with the US freezing $344 million in crypto linked to Iran. But XRP seems to be moving independently from traditional markets. On the regulatory front, well, there's some interesting developments. 35 major crypto organizations just petitioned the SEC for permanent DeFi regulations. And here's something that caught my attention. Former Ripple CTO came out to clarify there are no secret government deals with XRP. Sometimes rumors get wild, you know? They're just normal business contracts, nothing mysterious about it. Now, the Fear and Greed Index is sitting at 39. That's still in fear territory. You know what I've noticed over the years? Fear often creates the best buying opportunities. XRP search trends are pretty low at 21, which means the general public isn't paying much attention yet. The XRP to Bitcoin ratio is at 3.67%, suggesting XRP might be undervalued compared to Bitcoin right now. Let me tell you about the whale activity. This is huge. Out of 601 total transactions, 799 were whale transactions. That's significant volume from the big players. And remember that 34.9 million XRP leaving exchanges? That's one of the biggest outflows we've seen in 2024. Meanwhile, futures traders are actually going short while spot buyers are accumulating. That's a $700 million difference in opinion. From a technical pattern perspective, we're in what's called an Elliott Wave C correction phase. Translation? The downward move might be almost done. The Wyckoff analysis shows we're in accumulation phase A with 33% confidence. This is typically where smart money starts buying at lower prices before the trend reverses. We're also approaching the tip of a triangle pattern, which usually means, wait for it, a big move is coming within 48 hours. Now here's where it gets really interesting. The AI predictions show something quite fascinating. Short term, there's an 83.9% chance we could see XRP drop to $1.25. That's about a 12.6% decline from here. But hold on, the 7-day prediction shows $2.03 with 81.8% probability. That's a 42% increase. And the 30-day forecast, $2.11 with strong confidence. So it looks like short-term pain, but medium to long-term gain. Let's talk about the risks, because we always need to be realistic. There's that 83.9% chance of a drop to $1.25 first. We've got ongoing geopolitical tensions, some regulatory uncertainty still hanging around, and those futures market short positions creating downward pressure. Plus, we've got the Fed rate decision coming April 29th, which could shake things up. So here's my overall take based on this AI analysis. This looks like an accumulate situation. Gradual buying, not all at once. The data suggests we're in a great accumulation zone. Here are the specific levels. Primary buy around $1.35. Secondary buy, if we hit that $1.25 level the AI is predicting. For risk management, a stop loss below $1.15 would be wise. Target-wise, first target at $2, second target at $2.50 if we break through major resistance. The recommendation is starting with about 30% of your intended position and dollar cost averaging if it dips further. And that's it for today's analysis. Remember, this is all based on AI data and should be used as reference only. If this was helpful, please hit that subscribe button and give us a like. I'll see you in the next video. Take care, everyone.